Good morning, you're watching Business World Live. I'm Danie Laurel. It's the start of a new trading day. Let's kick off with our banner story. Today is day one of the week-long ECQ in Metro Manila and 4 nearby provinces, and this is seen to derail the country's economic recovery once again. Roberto Claudio of the Philippine Retailers Association says the economy is already cracking under the weight of the repeated lockdowns. For one, non-essential retailers and dine-in restaurants will have no revenues as they have to shut down this week. The World Bank also said the country's reliance on prolonged lockdowns instead of mass testing and other science-backed strategies is causing it to lag behind in the road to economic recovery. On the other hand, CP President Dan Lachica said electronics exporters will be allowed to operate at full capacity with, quote, strict compliance with safety protocols. In effect, Lachica said exporters will barely be affected by the ECQ unless it is extended. But over the weekend, NTF spokesperson Restituto Padilla told One News that the ECQ might indeed be extended if the surge in COVID-19 cases continues. But one ray of hope that might just save business confidence is the signing of the CREATE law on Friday that's slashing corporate income taxes for small businesses while gradually reducing tax rates for all other companies. RCBC Mike Ricafort said the week-long lockdown will likely cut less than 1% from our total economic output and can be offset by the impact of the corporate income tax cut getting signed into law. Yesterday, the Finance Department also said the government's structural reforms, like the passing of the CREATE Act, should boost the economy's medium to long-term growth prospects. Okay guys, checking in on our markets today. I just want to show you here on my terminal our net changes, of course, in COVID cases, just to point out how we are hitting those record highs yet another day above 9,000 rather, so we're at 9,450 as of last print. Now let's take a quick step back and check in on the global equities, because I did want to show how we are moving quite in the opposite direction. You can see actually Wall Street closing in at a record high on Friday. Meanwhile, Asia, I just want to pull that out for you, is continuing to see some gains. So it does not seem to be the same story as we open our markets here together. You already see an immediate slide to 6,400 levels here. Recall that 6,400 is a very key support level for a lot of economists here. We're already down by 1.4% as we begin this week of lockdown yet again. Now, already last week, there was weakening sentiment. We had those rising number of infections, and we still remain Asia's worst performer and still one of the world's worst performers this week. On the plus side, of course, as we mentioned in the banner, Duterte has now approved the CREATE bill, although markets don't seem to be celebrating that right now. Now, all of this happens to be expected. Already over the weekend, you've got several analysts weighing in and saying what's going to be happening this week. BDO's Jonathan Ravela saying we will see another sell-off. Investor sentiment was already shaken by the rising inflation, even ahead of all of these pronouncements. Now, COL Financials, April Lintan, is saying that this surprise lockdown will have a negative impact on equity. She's looking, of course, at those property developers. You've got the malls here. You've got the restaurants, retailers, non-essentials will be directly affected. And she said that everyone's watching on whether this lockdown will be extended. Now, another one here with, of course, a negative pronouncement this week, Tina Ulang of First Metro Investment. She says that corporate earnings will have a fallout and this will further weaken sentiment. She's also looking at infrastructure and construction-related selling. And another one, Papa Securities, is saying that this might actually be a buying opportunity. He says that still, regardless of all of these pronouncements, the benchmark index has had a strong support at the 6,200 to 6,300 level. You can see here on my terminal the year-to-date of the mall operators, and you can see that on the right part how they are sliding now. SM Primer, biggest mall operator, down by 1.4% early this morning. You can see the same situation when we look at the year-to-date performance of the property index. Save for one, Cebu Landmasters, the property sector is down by 12.2% in 2021. And take a look at our airline carrier, Cebu Pacific down by 1.6%. MAC, which of course serves the passengers in PAL and other tourism-related industries, is down by a hefty 5.2% this morning. And finally, those construction companies that Tina Ulang was talking about, take a look at EEI, down by 3%. DM Wenceslao down by 1.7%, and IRC, that of course does the Makati subway, down by 3.3%. All right, we will still have the opportunity, however, to buy in stocks. Forex and bond trading will be unchanged in terms of time from March 29 until March 31st. Let's check in on the biggest headlines we are watching this morning. The government's total gross borrowings nearly tripled, to about 710 billion pesos in the month of January. You can see on my screens here latest treasury data showing that total borrowings jumped by 185% from the over 247 billion pesos recorded in the same month of last year. Gross domestic borrowing soared by more than 411%, while the government's debt service bill also increased in the same month by 50% compared to 2020. However, foreign gross borrowings last January reached almost 30 billion pesos, which is 74% lower from the amount recorded a year ago. The increase in gross borrowings was attributed to the 540 billion peso cash advance from the Bangko Sentral ng Pilipinas, which was approved in 2020. This amount also included 90 billion pesos in treasury bonds and almost 62 billion pesos in T-bills. On the other hand, principal debt payments or repayments doubled to around 173 billion pesos in January. This increase is mainly driven by repayments for maturing foreign debt, amounting to more than 122 billion pesos. Now, the government is considering extending its comprehensive automotive resurgence strategy or CARS program for another 3 years. This comes after an auto industry group asked the government to review the conditions for the program after the pandemic caused a slump in the car sales. The interagency group on the CARS program is targeting the signing of an executive order by the end of June to implement that extension. The Board of Investments also revealed that investment incurred in the course of refreshing car models is also included in the extended timeline. Recall that car sales declined by almost 40% in 2020 due to mobility restrictions during the pandemic. It's the uncertainty that's keeping investors at bay, but the palace has said drastic responses are needed for drastic threats. Are these measures appropriate? Did we have a choice? Here to answer these difficult questions, we have with us Calixto Chikiamco, Foundation for Economic Freedom and columnist at BUSINESSWORLD. Good morning, sir, and welcome to the broadcast.
Good morning. Thanks for having me.
Sir, a revert to ECQ. Lockdowns have been happening all over the world, but it has been said time again that we cannot afford another lockdown. Maybe the other countries could afford it, but we could not. But it has again happened, even after pronouncements of the government saying we would never go back to this yet again. Do you think we had a choice?
Well, I think the government had no choice because it was not pursuing the other strategies. I think I think what was the decision to open up the economy was correct, but they did not properly prepare for it. Several things. One, of course, is that the government has still been unable to adopt a smarter testing, tracing, and isolation strategy. So, as you know, there are many even tracing apps. Every LGU has any tracing app. So there's been some confusion with respect to that, no? And I think the testing has not been still enough. In China, they would mass test the entire city, for example. So secondly, I think the government had more than 1 year, but they did not properly prepare for a surge capacity, increasing in surge capacity. So I think that's why now you see with a little surge where the hospitals are overflowing, even the isolation centers are overflowing. I think they did not properly prepare for really vastly increasing surge capacity when they opened up the economy. And thirdly, of course, the messaging has been mixed with, of course, some of the authorities showing that they're violating the health protocols. So again, this created a confusing message to the public, and therefore that contributed to the laxity in following the health protocols.
Okay, sir, but now, as you mentioned, here we are at this situation. Is it possible to even reopen the economy to save the jobs? Given the fact that, as you mentioned, even with the lockdowns, we don't have the capacity to increase the testing. We don't have the contact tracing that is required. Can we actually afford, with the risk of rising infections, to just go into a sustained reopening of the economy to save the jobs?
Well, it's really a tough choice, so it's really livelihood and of course public health. The problem is, of course, this lockdown is also exacting a toll in terms of public health. In terms of the non-COVID cases and also people going hungry. The hunger rate has really vastly increased. So it's really a tough choice. Um, I guess if you ask me, I think they should still open up the economy, but again, do better with respect to the testing, tracing, and isolation strategy, and vastly improve surge capacity.
Okay, sir, the government has said that this will not impact the economy since it's Holy Week naman. But of course, all eyes are on whether this could be extended. How long can we still afford this to be extended? How much is that going to cost us in terms of pressure on an already pressured budget deficit?
I think that we can, because of our present fiscal position, we can you know afford it for a while. The problem is that you know a lot of companies probably will go under if this is prolonged. Under the system. Uh, so I think the government cannot afford to sustain this for long. So it has to make a difficult choice, whether to save lives by saving the economy or just pure lockdown. And as you said, the World Bank has said that it has not been effective. These lockdowns have not been effective.
Sir, as an economist, what's your opinion on the non-essential versus essential goods? Because we've had some economists globally, saying that you cannot distinguish between these two if you're trying to reopen a consumption-driven economy. But this seems to be the solution here, and a lot of these non-essential industries are the ones being hardest hit. Can we actually, create these sort of levels in terms of who is more important to be employed at this period?
Well, as you said, we are a consumption-driven economy. I think 75% is coming from consumption spending, and the so-called non-essentials is vastly affected. But again, you have to again make some distinctions if you want to be able to have some kind of economic activity, right? So you still have to make some distinctions of whom you want to shut down, and the rest you just have to allow.
Okay, sir, create bill finally approved. Does this do much right now? We wish that this had been approved earlier, but now companies are not just posting lower revenues, which will have also lower taxation, but some are even posting losses. So will this, in any way, some economists have said, offset the effect of the lockdowns?
No, definitely not. Let's understand that the Create Bill had two components. One component was really to curb the abuses in the old system and to make a more level playing field between the old and the new investors, because there were some investors that had perpetual incentives. So that was one of the first objectives of Create. The other one was to have a tax cut. Now, the problem is, of course, it won't do anything for losing corporations. And then, secondly, reduction in taxes probably will not lead to increased investment spending, because especially with the uncertainties now, with these lockdowns, these health, they're not. Companies will not invest; they'll just bank the extra cash from the tax savings. So it's not going to do anything. And of course, long term, the other problem there is that, of course, these tax cuts will, of course, lead to government revenue. So in the end, the government may be forced to increase consumption taxes to make up for the losses in the tax cuts.
Okay, so not offsetting the problem we have at hand. And finally, sir, before we let you go, I know it's a difficult question, but are you seeing some bright spots in the economy, or some sectors that might be resilient here to bring us to the level of GDP targets of the government of 6.5% to 7.5%? Are these still achievable if some specific sectors pull in their weight?
I don't think they will attain that, given what's happening now, especially with the periodic lockdowns. My hope, though, is that the situation will force the government to make really structural reforms. And for example, they need to pass the Public Service Act to enable foreign investments in telecommunications. There is a ban on new licenses, and also on open pit mining. They should lift those bans. Especially mining is a big contributor to government revenues, and also we have the competitive advantage in mining, being one of the most mineralized countries in the world. So I'm hoping that this will force us to make structural reforms that are badly needed, and that is the hope.
Okay, thank you so much for those insights. As you mentioned, there may be not a lot of bright spots in terms of recovery, but indeed an opportunity here for some structural reforms by the government. Thank you so much. That was Calixto Chikiamco of the Foundation for Economic Freedom.
Thank you for having me.
That's a first look into the business day. Today is Monday, March 29, 2021. Catch Business World live for the market closes at 3:15 p.m. today. I'm Danie Laurel. Mask on, wash hands, and stay safe, Philippines. We are One News.